Welcome to my favorite time of the week, weekly Q&A, where I take the questions, and we're doing this for the second time, where we're taking video submissions in and answering those. So really exciting to see the people, hear their issues, and I take a lot of time in creating models to answer their questions. So this channel is about math, money, and freedom. A lot of new models today, which is fun always. And of course, disclaimer, this is edutainment. But in honor of the two new whole coiners in the Patreon community that were given birth to today, that I know of, people wrote to me today, they actually achieved their status. So I know the market's been very volatile and it's been hard on people, but it's also a very good opportunity to get things like Bitcoin at $30,000 when it was 64,000 just a couple of weeks ago. So big congratulations to them. Every cloud does have a silver lining. And for those people who were hurt and just got into the market in the past couple of weeks, hang tough. Everything will get better. The future is very bright. When you look at what's happened over the last 5 days, since Wednesday to today, Sunday, you will see all the people that sold in those 5 days. They were people that bought Bitcoin within the last 30 days. These are not long-term investors. These are not hodlers. These are not veterans. These are new people getting into the market, incurring a lot of pain and selling. And guess who's been buying? It's people with 1,000 or 10,000 coins or more. They are the people who are buying from the people who are selling, who are the retail people. Again, same stuff that we've known all along. Just for those of you out there who still have it and are thinking about selling, don't. Stay strong. So hang tough. Now, for the first question, let's roll the tape from Stephen in Australia.
Good morning, James. I've been having a fun morning trying to catch the dip, and I was just wondering, is it possible to sell at the top and then wait for the dip and then buy at the bottom, or is that just too dangerous? I like buying the dip and staking and holding and all that sort of thing, but I just wondered, I figured that, wow, if I sold all my BTC when it was up and then waited for it to go down and then bought back in, that would be great. So that's my question. Thank you.
So Stephen, he likes buying the dip when he can. Everybody likes buying the dip. Buy low, sell high, of course. Staking and hodling. But he asked the question, could I sell Bitcoin at the top and buy back in at the bottom? So yes, you can, but let's talk about staking first. A lot of people ask this question of me, why I don't stake. First of all, I don't like locking up for a period of time. In the event of a black swan event, I like to have my options open so I can sell quickly if there's an issue with the underlying asset. And of course, make sure, Stephen, if you are staking anything, make sure it's something you want to hold long term. Don't stake risky assets. Only stake high quality blue chip crypto type assets. Plus the other thing as well, I don't get excited over 5% per year. We entered into a small position this morning with a certain asset called Chainlink, and it's already made 15% in a couple of hours. So just think about that. Now let's talk about timing the market. Is it possible? So first of all, let's look and talk about top spotting, that is picking the tops. That's one of the things I like to do very much with equities. It is not as easy to do with crypto, but there's a lot of tools you can actually look at. So first of all, it's very important to understand where we are in the cycle, for example, the Bitcoin cycle. Second of all, not all cryptos run in the same cycle. For example, last top back in 2017 when Bitcoin topped out, Ethereum ran a lot longer, probably another few weeks into January 2018 before it topped out. So always beware of that. There can be correlation, but there also can be a lag. And look for spikes outside Bollinger Bands and RSI. Check out my TA Tuesday videos for how to do that if you don't already know. And also know the macro, know what's going on in the economy and everything else. And watch Bitcoin dominance. And we'll talk about that later, Stephen, in another question. And check my price targets. So I have detailed price targets for all the things that I hold, and I make detailed price analysis going out 10 years typically. So find out where we are in those type of assets. And I'll talk a bit more about Cardano as well later with an exit strategy. Now, market timing the bottom, that's a little bit easier. I call this bottom fishing, and I use Fibonacci retracements for this. And here you can see all of the Bitcoin bottoms and what's actually happened lately. You will see the correlation between the dips from the top of the market to the bottom. And we are down now at the 100% level. We blew through a little bit of support at 78.6. And of course, the 61.8, the 50%. And it didn't stop actually at the 61.8 in this downturn at all. It just blew straight through. So you can see very heavy manipulation. But these are good entry points for dollar cost averaging. Again, check out my DCA video using TA as well. I think that was last Tuesday. I'll give you a lot more detail as to how to actually nail that bottom fishing. So the short answer to your question is yes, it is possible to get close to the tops and close to the bottoms, but I'm going to cover some other stuff in answer to another question in a few minutes that ties into this as well regarding things like taxes and other implications. So stay tuned for that. Thank you for the question. Now, next question. Let's roll the tape from Ryan.
Hey James, it's Ryan. Thanks for taking my question. I know all the talk right now is about the awesome altcoin projects that are out there, but let's be honest, the Bitcoin to alt ratio just hit an all-time low. Things are looking to turn around. What do you think about that?
So Ryan, great question. Looking at the Bitcoin to alt ratio, Bitcoin dominance, what do you think about that? Is it time to really focus on Bitcoin? So this is a brilliant question. It's something that I look at all the time. So the dominance chart typically will bottom out for 1 to 2 weeks. In this particular case, it is down for exactly 8 days at all-time lows. Now you'll see as well, there's a lot of garbage coins that were getting a lot of attention. The Doge, the Shiba Inu, whatever, all this crap, SafeMoon. So be careful that when you see that type of hype, you know Bitcoin's going to be weak, but eventually the quality money comes back to the safer assets. And the people that are new to the crypto market that speculated in these altcoins or ish coins, whatever they call them, they now know where to play because they probably got very badly hurt. So that is typically what they call the move from the most speculative assets to the least speculative assets. And that's happening right now. And now's the time, you're dead right, to add the quality names, despite the fact we did take another dip for Bitcoin, but I think the future is very good from here on in. And the flight to quality is happening as we speak. So really good question. Very, very important to look at that Bitcoin dominance and find exactly where we are in the cycle. And again, everything in this world is in cycles. So well done for spotting that. So let's roll the tape on Jeffrey aus Berlin.
Hallo James, schöne Grüße aus Berlin. So I do think there's plenty of room for this bull market to keep going. My question to you is, what's your plan for the bear market? Are you hodling? Are you going to take some capital gains off? What's your plan?
Jeffrey, great question. So the room for bull market to keep running, yes, there is. What is the plan for the bear market? Holding or taking some capital gains off? So this is how I think about it. And it's a little bit of a long and detailed bear market plan, but bear with me here. There's a number of different points. So first of all, there's an old expression that the best laid plans of mice and men often go awry. So yeah, you can plan all you want, but it's very difficult to plan when everything is in motion. And right now, I think this world is very different to the previous cycles for so many reasons. The number of institutions hodling, the macro backdrop of money printing, and the maturation of some of the crypto use cases. I think that has really changed everything for the better. And I don't know if the bear market will be as bad this time around. We are seeing some extreme volatility right now, but again, that's needed for growth. When I also look at other things, for example, depending on the assets you hold, you always have to look at the window and see if there's better assets to be held. For example, what happens if crypto tops out at, say, $200,000 Bitcoin? And at the same time, Tesla nails FSD. And that means, to me, robotaxis are imminent, which that means Tesla all of a sudden becomes a very, very compelling investment real fast. It could be the case to swap out of that, or maybe there's a breakthrough in cancer treatment or some type of medical breakthrough. So you've always got to be prepared to tap dance and move things around. Now, they could also include real estate opportunities. I know many of you out there are looking to buy your first properties, looking to invest in crypto, so you can make enough money for a down payment. So that's another option too. In addition, I like to hedge my bets using options and futures. So that could also be an option. Again, hodl and use different financial derivatives to protect yourself to the downside if there is a downside. That being said, I will sell some of my what I call speculative altcoins that I know have limited upside, again, based on my price targets. And stay tuned as well, because coming up real soon, I'll show you my exit plan. Now, cycles as well can be preempted. This is a very important thing to consider because sometimes people anticipate what's going to happen. Everybody's talking about October, November this year when the bull market will end. Well, if that's the case, all the other traders will get out in September, October, and that could actually drive a market down. So again, you've got to be prepared and watch everything that's happening to make sure cycles are not preempted by these trading activities. So the other thing, as far as I'm concerned, I do plan on holding Bitcoin and Ethereum, or a lot of it, as long as viable. So that's the bear market plan in a nutshell. Now, the other thing I do want to talk about real quick is what I call the fear of losing out. Imagine I still go back to Bitcoin and its very scarce supply, and imagine all of a sudden all of the big treasuries gobble it all up and you sell close to a top, but that top isn't really a top and it becomes a super cycle. And that would be a real shame. So sometimes selling something too early can be painful. And just for example, selling things like Netflix too early, or Amazon too early, or Tesla too early can cost you a lot of money. So when you have a really, really good pristine asset, try hold it as long as possible. Don't trade in and out of it. Just hold it and hedge it as best you can. So that is a great question. Thank you so much. So Amir, great question from you too. Roll the tape.
Hello, James. Thank you for all your videos. We would like to know what your exit strategies are in a bull market, and when do you consider taking some profits not to be extremely low in a volatile market such as what we're witnessing. Thank you again.
So from Amir, what is your exit strategy in a bull market and when do you take some profits? So let's look at this with my profit-taking model. This is something I put together. It's always kind of been in the back of my head, but it's just one option. And it's what I call the target RII, basically pulling your initial investment off the table and selling 20% of your holding after every 50% gain. So this example here is for Cardano. Imagine you buy 1,000 Cardano at $1, which you can pretty much do today with the big dip that we have. Your cost basis is $1. You have 1,000 Cardano, your balance is $1,000. Now my target for Cardano is $3. And imagine it goes all the way to $3. Then we have $3,000 investment. So what I would do then is remove my initial investment, which would be about $999 to make it exactly 333 coins. And I would sell them. And I pull $1,000 off the table. And I'd be left with 667 Cardano coins worth about $2,000. Every 50% gain, I'd sell 20%. So if we go to $4.50, I'd sell another 133 Cardano, take another 600 off the table. My balance would be $2,400. If it goes up to $6.75, same thing. Sell another 20%, which is 107 coins. And I'd be left with 4,300. Now, a lot of people are talking about a $10 Cardano this cycle. Many are even talking about a $20 one. I don't know if that's achievable at all. But again, this is the way I would actually look at it. And if we do go up to $22 or above $20, again, I would sell an additional 85 coins, left with 300 and change. But the important thing to note here, though, is if you do have that pristine asset that's going up in value, you can see using this model, I would have pulled 4,600 off the table to reinvest maybe in other places that would have better returns or safer bets, for example. But the other thing to notice is if you just held the original 1,000 coins, you would have a profit of $22,000. And if you do my model here, you pull 4,600 off the table that you can reinvest somewhere else, maybe get a 4x somewhere else, which would take you up to $16,000 to $20,000. And your unrealized profit would be $6,800. So again, you can play with these ratios. This is a model I share on Patreon, but don't join Patreon till the beginning of the month. And then you can see it then. Patreon charges the day you join and the first of every month. So I just want people to be aware of that. But again, this model, I'll be tweaking many different versions of these for different types of altcoins as well. And to stress, there are ways that this can work and save you a lot of money. But imagine selling a lot of your Tesla before it actually achieved its top. It went from 40 to 850, where I shorted some Tesla at 850. like Michael Burry did, which I found out just recently. And then the MicroStrategy case, I went all the way up to 1,300, but I didn't sell. I held, and now it's at 450. So it cuts both ways. Taking profits is always good, but make sure your timing is right. So great question. Really appreciate that. There is one final point I do want to mention, though, and that's taxes. It's very, very important to know your tax situation. So imagine you have Bitcoin, cost basis $10,000, and it goes to $100,000. You sell at $100,000, you incur a capital gain of $90,000. And imagine we're in a super cycle. For you to be able to get back in to Bitcoin after paying your short-term capital gains taxes in somewhere like California, that would cost you, the taxes owed to be about $44,000. And your new Bitcoin entry point to be able to pay off your taxes and get back into Bitcoin would be $55,973. So that means you need a 44% drop to be able to re-enter just at your break-even point. And this is the danger of short-term capital gains. And this is why we've probably had a lot of selling as well last week, so people could raise money to pay their taxes. So there's other scenarios there. The short-term capital gains tax in Nevada, for example, is less. It's about $34,000 instead of $44,000. You save about $10,000. Then you need a dip for Bitcoin to fall from $100,000 to $65,000 to be able to get back in. And that's assuming you can actually nail that bottom too. And then long-term capital gains, you'll see this story is a little bit different. Taxes will be $26,000. Again, you need Bitcoin to drop to $73,000 to be able to get back in at the same level. And long-term capital gains in Nevada will be $13,500. And you only need a 13.5% dip to get back in. So always bear in mind the tax implications of your jurisdiction wherever you are in the world. Hopefully you're in a place where there's no taxes. That'd be awesome. But that is important because imagine we're in a super cycle. Imagine Bitcoin goes to, some people are calling for 450,000 and you sell at $100,000. That's a missed opportunity. So just think about that too. So next question from Preston in Beijing. I love this one.
Greetings, Invested Answers family. So I'm here at the Great Wall. My question is, my kids want to invest. What can I do? Where do I put them into? Thank you, guys.
So Preston asks, what's the best way to get kids started in investing? I'm going to give you a little story. First of all, my story. When I was a teenager, I saw a movie called Wall Street and a character called Gordon Gekko, and I was fascinated by it. But the first thing is, his lesson is greed is good. I don't believe it's good. I think freedom is good. You need to teach your kids the importance of time and the cost of raising a child too. I also think it's important to allow them to invest in something that they need to understand. They need to be able to enunciate the exact use case back to you and what makes it unique. So turn them into little mini analysts as well. That is going to be so important for their future. That'll help them have that discipline to analyze everything, not only crypto, but also job opportunities and maybe schools and education, etc. Also, third point is teach them the importance of investing and how their future is going to be expensive. For example, total cost per kid. And then teach them the difference between holding something long-term versus short-term speculation. Maybe get them into a safe position in, say, Ethereum or Bitcoin because of its long-term use case. But maybe have them throw $5 or $10 at a casino like Dogecoin at 19 cents, just so they can understand the difference between investing and speculation. I think that would be a very important lesson too. Now, what you could also do is share with them a methodology. This is basically a cost per child over 18 years, and I'm working on a model I'll share with you all, but it has everything from education supplies, healthcare, housing, transportation, food, private schooling or public schooling, whatever the case may be, and what it costs over 18 years. And you can see that the numbers very quickly approach $1 million. So when you teach your kids about their cost of living and share this with them, it'll give them a lot of appreciation for all the stuff you do as a father. So kudos to you. But have them start a spreadsheet, knowing the total cost per kid, make a goal, and work backwards. So have them, as an example, say, okay, imagine Bitcoin goes to $1 million in 10 years, and your cost of education and food and everything is $1 million. How many Bitcoins do you need to pay it off? So that would be fun. Anyway, just things like that. Kids are very smart. They know how to do mathematics, and It'll teach them the discipline of planning and rigor and understanding exactly how to invest, which will pay huge dividend for their whole lives. So watch for that model. So the final fun question of the day is from Catherine. Roll the tape.
Hello from your biggest fan. I couldn't help but notice your extensive art collection. Some of it's beautiful, some of it's downright strange. What's the deal?
So that's a fun question. So first of all, a little historical background story. My father used to be a CPA, as you guys may know if you've seen some of my older videos. That's how I learned about ledgers and stuff. But he used to sometimes take payment in forms of art to save on taxes, because you could give somebody a bronze statue like that bull over there, which is worth, say, at the time, I don't know, $15,000. And say, here you are, that's your payment for doing me a tax favor or something. And that way he wouldn't have to disclose it, etc. I'm sure the tax rules have changed over the last 40, 50 years, but that's what happened in the past. And since then, I learned a little bit about the value of art from a young age. Now, the other thing that I do is every time I go to any place, I used to travel an awful lot. I used to fly 300,000 plus miles a year. And anywhere I went, I'd pick up something from that place as a memory. So I might have a little brass turtle from Hawaii, or, I don't know, a nice piece of art from the south of France, and I'd bring it home. And that's how I have such an eclectic mix of stuff. So thank you for the question, but each one is a memory, and each one is from a different part of the world. So big thank you for that. Let's talk about the conclusions real quick. Here, obviously the recent manipulation in the market has hurt some people, and a lot of people have lost money. But stay strong, don't quit. You know, when things fall in a week, they can also rise as fast in a week. So keep that in mind. The future is very bright. Now, this hardening, and I've had some people write to me saying they are fed up with crypto, especially after just getting in 2 or 3 weeks ago. It left a very bad taste in their mouth. I'm saying, you just got in the wrong time, and I keep saying timing is everything. But it's also better late than never, and the future still remains very, very bright. The situation in this market will help people be more cautious with their strategies, and nobody really knows where all of this is going. But as far as I'm concerned, the macro backdrop is unbelievable. The technology developments are unbelievable, and I believe over the next 10 years, we're going to see a transformation like we've never seen in the history of the world. So I'm building as many tools as I can to share with you all to help you be equipped for this as well. But sometimes getting hurt in these market conditions, see that as an opportunity. I got badly hurt when I was 21 years of age, and it taught me very valuable lessons. And it made me vengeful. I said, that's never going to happen again. And it turned me into an extremely disciplined investor. So sometimes getting kicked in the teeth is actually a good thing. So big thank you to everybody. Hope you like this. If you do, hit the like and subscribe. Thank you, Patreon, for the questions, and see you all soon. Bye.